Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Our guest for this week's show is real estate investment and self-storage expert, Andrew Abernathy. Now, Andrew is the chairman and founder of Abernathey Holdings, a Class A self-storage development firm that has capitalized on vertical integration from inception to completion all the way through the day-to-day operations. Now, Andrew began investing at the age of 13 with only $4,000, and now at the age of 27, he has turned that $4,000 into an investment company with more than $100 million in assets. And so with that, guys, I'm excited to have Andrew with us here today. Andrew, how you doing, my friend?
Good. How you doing? I appreciate you having me on.
Yeah, excited to have you here. Excited to chat with you about your business and the good, the bad, the ugly, and everything between. So hopefully there's not too much in ugly and in between there. It's all good, right? But in any event, Andrew, what I'd love to do here for those folks that aren't familiar with you, that don't know of you, take a few minutes. I gave you a very brief introduction. Maybe take a few minutes. Tell us a little bit more about your background. Obviously, you got started investing at a really early age, which is fairly unique in and of itself. So tell us a little bit about you, your background, and how you found your way into the real estate world.
Yeah. So my family's been involved in the farming community since the early 1900s. We've been farming since then. I was actually the first of our family line to actually branch out into something other than farmland. Started out, doing some apartments and some commercial, and just trying to figure out what I wanted to be involved in outside of the farmland. And I'd say about 5 years ago, I landed on self storage, and it's been one of the best decisions I've ever made.
Okay, I'm going to dissect that. We're going to expand upon that a little bit.
Yeah.
You turned basically 14 years into like 20 seconds or so. We're going to go a little deeper.
Elevator pitch.
Yeah, no, fair enough. So, talk to me about that. Farming, background in farming, family, generational farmers, and you were the first one to really venture out into the real estate world. Now, I don't know if that was at the age of 13 or 14, if it was real estate or if it was something else, but give us a little bit more of the background story, and then really what I'd love to hear is at what age and how did you get introduced to real estate? And did you have a mentor that was in the family? It doesn't sound like you did, maybe outside the family, but just give us a little bit more of that backstory if you would.
Yeah, of course. So when I started out, I was getting $5 an hour running a grain cart in the family farm at 10 years old, and helping kind of doing puts calls on the grain market that we had on hand at the farm. And after I saved up 6,000, I had 4,000 after buying a red go kart for 2,000. I mean, can you blame me? And that $4,000, it was actually in 2009, my birthday, March 23rd, when I was 13, that the market was towards its bottom. I think it hit bottom on March 5th, so not much after. And I put in the $4,000 into Ford, Bank of America, Fannie Mae, Freddie Mac. I was a Warren Buffett fan at the time. It still am. And I turned that 4,000 into 80,000 by the time that I was, I was about a 10th grade in high school. I was like 16.
Mm-hmm.
And that's when I went to my buddy's dad banker in the town of 800 where I grew up. And I said, I really want to go buy some stuff in Bismarck, North Dakota. I think the oil boom's coming. And he said, Andrew, it's pretty cool you have 80 grand, but you're going to need, probably 300 grand down and a balance sheet. Because these apartments I was looking at were like 1.2 million dollars.
Mm-hmm.
So that's when I said, all right, well, I can't afford a lawyer. So I printed off Warren Buffett's 1956 partnership agreement. I whited the names out, and I found a couple farmers that give me 300 grand if I worked for free. And so I got that done, bought the apartments, oil boom hit. And that was kind of my first, we made $1 million profit in like 12 months. I mean, it was a rare deal, right? Oil booms don't
And you were
happen
still in
very
high
often.
school when this was happening?
Yeah, I was, by the time we cashed and made the million, I was about to graduate high school. I was
Yeah,
done with high school.
still.
So then I went and just kept going. I started acquiring. I bought equipment dealership. We bought some other real estate apartments, commercial, and like I said, we've raised about 100 million to date, but 80 million of it was this last year. So I probably raised about, between 14 and 22. I probably had about 20 million raised.
Mm-hmm. Good deal. That's awesome, man. That's exciting. I mean, you're in high school. I mean, you're doing something very different than 99.9999% of your classmates, right? And so,
Yeah.
um, just talk to me about that. I mean, that's, I mean, you're, what you're discussing and what your interests are at that point in time. I'm assuming you still did the normal teenager things, right? But like your mind was in a very different place than that of probably majority of your friends and all of your classmates. And so how did that dynamic go?
I had a lot of older friends.
Yeah, I bet. Good.
I used to go out to Rehoboth Beach, Delaware in the summers, between Springs work and harvest. And then in the winters, I would clean combines at the local John Deere dealership. So really, I didn't play any sport. I played sports till 10th grade. My family is big sports, but I just never got into it.
Yeah.
After 10th grade, I was 100% full time. If I wasn't in school, I was trying to make money to invest. And literally I mean, I had a few acquaintances, but they were all interested in the same things, and I really was more interested in building businesses. So, a lot of my friends were 50 plus, but that's okay.
So those first couple farmers that you got to invest alongside you in those, the apartments there in North Dakota, did any of those become your mentor? Was that kind of a team that you put together? Obviously, a number of those had many more years experience just with life in general, or were you kind of the lead in pretty much all that you've done?
Yeah, so a lot of those two both stayed in, and they still are involved
Yeah.
as partners, and I value all of our partners. We've got about 80 of them, and
Yeah.
I enjoy talking with each of them and putting together the common denominator of things that they have for me to learn and hear from them. I think, and my dad has always been a huge mentor of mine,
Hmm.
and my uncle and my grandpa, and I got a lot of good mentors. But I did in 2014. I saw an article of the richest man in North Dakota, Gary Tharaldson, and my uncle said you should reach out to him. I'm like, okay, so I gave his office a call, and they said he wasn't around, and I gave him my number and my name, and 2 months later he actually called me, and we actually became pretty good friends and started talking weekly, and that was 7 years ago, 6 years ago. So he has become a really big mentor of mine, because how Gary found his wealth is he started it with zero, and he started in the 80s in the hotel business when hotels were very fragmented. It's Bill's Hotel, Bob's Hotel, Jeff's Hotel. He came in and embraced the brands. He went and built 250 hotels, sold them to Goldman Sachs in '06 for a little over $1.7 billion.
Wow.
And he embraced the brands. He focused on building the best product, and then eventually he got bought out.
Man, I love every bit about that story. So, that's interesting. If you went and told 100 of your just friends, acquaintances, whatever, if they asked you for your advice on, give me like the one of the just one general key to your overall success, I'd say that's a big key, right? That's one of your big keys right there. Just making that relationship, establishing that relationship. Obviously, you're doing well before that, but I'm assuming that that's been paramount to just some of the decisions that you've made. If you told 100 other people that, I'd find it hard to believe that even five of those 100 would actually take the initiative to do that. And it wouldn't be so scared to actually, step out of their comfort zone and make that phone call or write that letter, whatever the outreach method was. And so kudos to you, man. That's awesome. Absolutely love every bit about that. And at the end of the day, he's just a normal guy, right? He's done really well, but he's just like one of us, right? I mean, he's
Cancer on every
hustled,
morning, just
he's
like
worked
us.
his ass off, right? I mean, he just worked really hard and made smart decisions along the way. Um, no, that's awesome. So let's talk about self storage, and so I think that probably leads in. I'm guessing some of the conversations you had with, was it Gary? It was Gary, correct?
Correct.
I'm guessing some of the conversations you had with Gary about him, putting together, building a brand in the hotel space, when it was a very fragmented space. So again, comparing that to self storage, there's lots of consolidation happening. There's major brands out there, but 20 years ago, that wasn't really the case. I think Public Storage and maybe one other, was big, maybe 20 years ago. But since then, there's been many other big players that have come into the game. But even then, it's still fairly fragmented, right? Like there's still a lot of consolidation that need and will inevitably happen. And so I know that before we started recording here, you had made a mention that you decided to kind of hang your hat on the Public Storage horse. And so you're a developer, you do ground up construction on Class A developments, but you do it underneath the Public Storage brand, which is one of the national REITs in the space. And so give me the reasons behind that. Why go that route versus either buying existing and or developing, but creating your own brand and building it to a national scale?
Yep, good question. So everything I've done, I've kind of went to Gary and asked for his advice, and we kind of followed his model that he did in the hotels. I always like to create my own problems, so that's why we develop and not buy. We do everything ground up, and we're able to find efficiencies. So, our company, my partners and I, we own the construction company, the garage door dealership, the equipment dealership, and really, we have a lot more plans of other things we'd like to acquire along the way. And this has allowed us, our average facility retail cost is, 13 to $15 million,
Hmm.
but we're actually able to build those for about 10 to 15% less due to all the companies that we own in-house, one pocket out the other. So by being the developer, those efficiencies are possible, and that really helps with our ROI. And then once they're developed and it's a good product, we then pass it to public storage. And there's a lot of reasons. One is I really don't have the brain capacity or wherewithal, or do I really want to recreate what they've created? I mean, they
Hmm.
have the best algorithms. They are the biggest, the most well known, the best occupancies, the best rates in the industry. And I just want to be the best developer slash owner of these facilities. And what they charge is so little. Gary Theraldson pays about 12% for the Marriott name, and he has to manage them. And we're sitting there paying, a 4% management fee with some other pass through costs, and they run them and brand them. It is just a no brainer for us to pay so little to be with such the best names out there.
What type of commitment does that require in order to run with the public storage brand, if you don't mind me asking?
Yeah, they'll lock you in for a little bit because there's a lot of upfront costs for them. So there
Yeah.
would be some breakup penalties that reduce over the first few years. But other than that, it's pretty simple. They'll come in 2 months prior to CO. They'll get staff trained up. They'll put their signs up and their boards and their desks and their coffee machines and microwaves in the breaker rooms, and off they go.
Hmm. Is there any downsides of being with the major player? I mean, obviously, we can all probably fairly quickly come up with why it's such a positive relationship to go with the national player. As you'd mentioned, you don't necessarily have you don't want to put the brain damage into recreating the wheel and recreating the infrastructure that's taken them decades to build, right?
Yep.
And but what are some of the downsides, if there are any?
Yeah, some people say that they're worried that public storage will pass leads onto their facilities that they own instead of to the third party. I I don't have much concern about that. I mean, heck, with our 96% average occupancy and highest rates in the industry, if they are, I guess so be it. But we're doing pretty well. So a lot of guys really have a lot of time that they think about that, which I try not to worry about the small things. And some people like to go just like to create things. Some people like to swim, and I like to take the easy road if I can.
You'd like to
So
buy the swimming pool.
yeah, yeah. So think smarter, not harder. I mean,
Yeah,
there's
I love it.
obviously things that people, but for me, it's easy. It works. I get a check every month. We're able to build them for less and focus on that, and then I can spend time with my beautiful family on the time that I'm not working on building a new brand.
No, I love it. I love it. Now I know there's a number of other larger operators, some of the publicly traded operators as well that offer a similar type arrangement, and I'm sure you compared a number of them before deciding on public storage. What was the reason that you ultimately ended up going with public versus some of the others?
Yeah, so I went to Gary and asked him. I said, Gary, here's the top five names, here's the rates. And Gary's words, not mine. He's a very simple man. He said, "Well, which one's the biggest and the best?" And I said, "Well, the biggest is public storage." He said, "Well, there's your answer." I said, "Okay." And that was about
That was
that.
it.
So
Good deal.
we moved on.
Now, do they help you with identifying new locations? Do they say, "Hey, Andrew, we want to be in these five submarkets," or do they go as granular, saying like, "We want to be in these five submarkets on these specific corners, on this specific road, at these intersections, what have you?" What does that look like?
So we have three land guys on staff, and they
Mhm.
go out and look in our three territories. We have one guy per state that we look in: Texas, Arizona, and Southern California. Once they find a site that we like that matches our criteria, so we have a very simple criteria again that Gary put a similar criteria into place with his hotels, so we recreated our own. It is we need 100,000 people in a 3 mile radius. We need our average household income to be 100,000 in a 3 mile radius. In San Diego area, we need it to be about 140, just
Mhm.
comparable for average income and livelihood. And we need to be on and visible of a main thoroughfare of 35,000 vehicles per day or more. we need to achieve $1.70 a foot rent um, in our market. San Diego, more like 220. And then the other thing is competition and landlocked. I'm okay with spending 20% premium to make sure that there's not a bunch of ground around us that can come in and compete, and also location, location, location. So I'm okay with spending a lot of money on our sites because they fill quicker and they're there forever, and you don't have to worry about things. So I mean, some people think I'm crazy with the sites we buy, but they pencil for us. So to answer your question, we go through that criteria. Once we find something that matches all of that, we then bring it to public storage, and they have a great team that goes through it and analyzes it and gives us their thoughts just to double check, make sure all of our numbers are accurate, and then they will pre-approve the site for their brand. So that's kind of how the process
Okay.
goes.
It's interesting. You make mention of some folks, can't believe some of the prices that you pay, but you might be buying a premium location. And there's something to be said about buying the main and main, right? A location that's irreplaceable. Because you know what? If the day comes where self-storage becomes irrelevant, which I don't think it will, but in the event it does, but you're still on main and main, more than likely there's going to be another higher and better use for that main and main. Whereas if you'd have saved a few pennies by building a block away or, quarter mile down the road, which is no longer main and main, that might not be the case. And so, um, I think a lot of people get so caught up on buying at the lowest price, and they need to really switch their mindset to buying at the highest quality.
Right.
Buying the best, the best lot, the best location in their specific submarket or area they want to be. So I think that same holds true, and no matter what asset class it is, it really does. Whether it's a hotel like Gary owns, whether it's retail, whether it's multifamily, just name office, any of them, right? It's all relevant.
And my goal is to go build, 500 of these. And it's just like our farmland. We're in the land business, right? It
Mm-hmm.
just so happens that their storage facilities might sit on some of these for 100 years, but really it's the land.
Mm-hmm.
And, the storage buildings, if we're talking 100, 200, 300 years, because that's how I think, because my family goes back that for far the other way in the real estate business. And I am a steward, and I just need to make sure that all the decisions that are made at the end of the day, the dirt is what lasts, not so much the
Yep.
building.
Yep. No, I love it. I love it. So let's talk about that. Let's talk about the long-term plan. Talk to me about the, what you vision over the next, number of decades with the self-storage company. Is it a build and hold model? Is it a build, roll up 100 of these and then sell off to public storage, or another institutional player? What's the plan?
Yeah, so we're doing a build and hold model. We take care of the cost segregations to get our investors as
Mm-hmm.
much depreciation through their K1 as possible on year one. As you know, those deductions have been pretty advantageous. And then it's a hold model. We feel rates will continue to rise. We feel that, well, not feel, we know we're building into some of the best cities in America in these three states that I just mentioned. There's 333 million people in the United States currently, and 82% live in cities.
Mm-hmm.
In 2050, there's projected to be roughly 404 million people in the US, and 89% are supposed to live in cities. That's roughly an 80 million person influx. At 6 square feet per person, that's a half a billion square feet needed, not including depreciated assets that need to be revamped,
Yep.
and not including old style storage that's being revamped with the newer, more beautiful facilities being built today. So, my goal would be to continue to build. We have a great investor group. I probably might raise another 50 million and then I'm going to stop. My math shows that because we don't do dividends, we're a Berkshire Hathaway model. We've never done one. Every 5 years, we do tender offers. So make sure people aren't handcuffed to the investment. Our
Mm-hmm.
company will buy back the shares. But we have people that just want to stay because they're seeing the balance sheet continue to grow. So I'll probably raise another 50 million, the team and I will. And then I think from there we can snowball, once we spend, because
Mm-hmm.
we got 300 million to spend right now with bank debt. Raise another 50 million, we could probably go spend another 150. We put about 35% down. And so I'd like to build 500 of these, hold them all into a portfolio. I'll probably be about 59, 60 at that time of my math. And then, I guess selling would be an option, but then what, So
Then what?
we'll see
Yeah,
at
right.
that time. Once I hit 500, I'll make that decision.
You'll have a bunch of other
I'll
irons
come
in the
back on your
fire.
show and tell you.
Yeah, yeah, exactly, exactly. So, talk to me about the debt side. What type of debt are you guys utilizing on the construction and the perm phase? Is it just local or regional banks, or do you have more institutional type debt in place?
Yeah, so when we've raised equity, we've done a little private debt at 6% interest only, 5-year balloon, but not a whole lot of it. But on the debt side with the banks, we do localized banks. A lot of them are from North Dakota because North Dakota actually has one of the only state-owned banks, and Bank North Dakota. So they participate in a lot of our stuff. And a lot of the North Dakota banks have locations here in Arizona too. So it works quite well. But we'll max out one bank and we have to go to the next because each bank with Bank of North Dakota can usually do about 20 to 50 million, depending on their size. And we do 35% down. Now, part of that 35% is us forfeiting our profits. We have about a million and a half of profits in each facility from our vertical companies in house. So if the bank needs 5 million, we'll forfeit that 1.5. So we'll give them 3.5 cash, 1.5 equity, and that's worked quite well. Once it's stabilized, we are more apt to refinance down to a 30%. We just like to be really conservative. I haven't lived through a recession, but I've read and heard from my grandpa and dad about a lot of them. So I'm probably about one of the most low risk 27-year-olds you might meet.
No, I mean, what's the one thing that can kill you during a recession if you're holding real estate? It's the debt piece, right? And so having that low leverage in there, and we're the same way. Across our portfolio of manufactured housing, we're on average right around 60% leverage.
Perfect.
And yeah, I feel time will tell, but I feel it's a good amount of buffer. Things would have to get pretty darn bad in order for that buffer to go away. But you never know. We got to plan for the worst, right?
And I'm young. I like it that way. As I have time on my side. There's one thing you can't buy, and that's time. So there's no need for me to risk it all and start over because then you're selling time for zero.
Yeah, no, absolutely. Great point. You're 27 now. Obviously, you've done a great deal in a short period of time. You've garnered a lot of wisdom from your various mentors, a ton of wisdom from Gary. I want you to step into Gary's shoes at the moment. And I know that he's, many, many years your senior and has been doing this many more years. But again, you've absorbed a lot of wisdom and have learned a lot along the way, just yourself. And so if you're speaking to someone that's just getting started, whether it be self-storage or any other type of real estate, doesn't really make a difference, right? It's just, self-storage is just the vehicle. But if you're going to give advice to looking back to you when you reached out to Gary, right? When you reached out and introduced yourself and you were just kind of getting started or getting rolling, what advice would you give that younger you?
Great. Well, I'm a conduit of men that are much smarter than me, such as Gary. So everything I say is not reinvented or original. I am simply spewing words I've learned. I'm the dumbest one in every room, and I'm proud of it. Well, my biggest thing is focus. That's a simple word I could use because whether I've been reading about billionaires or getting to know them, each one of them has created major wealth on one thing, and they've preserved it on diversification. And some people, I'm not saying diversification is bad. It depends on your goals. If you want to be a billionaire, and I do, and Gary said, well, then you're going to have to focus and be the best at something. And I said, okay. So I found storage. And the other thing I learned is I see a lot of people out there searching for years and decades for the idea. I'm just waiting for the idea, someday. There isn't the idea. There's a million of them, and you just have to grab one and make it the idea. And that's the confusion. So if you're starting out and you're younger, the problem with our generation is our attention spans are the shortest they've ever been. Books are getting shorter. A video's too long. You're like, never mind, scratch that. And heck, I don't own stocks, but I know the holding period for stocks over the last 100 years has gone down by multiples. I don't know the exact percentage, but I know by a large amount. And things take time. Good things take time. So focus, put your blinders up. There's a lot of good ideas out there, but you just got to pick one and ignore the rest. And use time as your partner, not as your enemy. And I guess those are the simple things. Sounds pretty cliche, but
no, it's
really
great advice. Yeah, no, absolutely. And I'm gonna back up because there was a couple questions I want to ask that just slipped my mind, and it was more so about your the other various companies that you vertically have integrated into your public storage development company. And I know you said Garage Door, the construction, and you might have mentioned a few others, but were those companies that you built from the ground up, or did you actually acquire a few existing companies along the way?
We acquired some existing. The construction company, we acquired a company that's been around for 20 years.
Hmm.
They built like 200 Burger Kings. So they had a killer model and they learned how to build them in a fraction of the time for a fraction of the price. So that was a great purchase. And then we've got a garage door dealership that we started from ground up, but we do work directly with TrackRite, one of the major manufacturers. And then our equipment dealership, actually, that started back in 1947 and
Wow.
we bought it from the third generation. We closed on that in January of 2015. Um, they were doing about 4 million in business annually, revenue wise, about 300,000 EBITDA when we bought it. And our amazing CEO we put into place after we acquired it, Luke Stewart, he's turned that business into almost 10 million in revenue, coming up
Wow.
on 700,000 in EBITDA, and that doesn't include the money we save on using our own equipment on our sites. That's outside of that. He built that just on third
Yeah.
party business. So that's a nice little cash injection into the holding company that has nothing to do with
And
vertical integration.
when you say equipment, what type of equipment are we speaking to?
Municipal and construction. So street sweepers, vac
Okay.
trucks, and we do water trucks. We build
Got
our
it.
own. Our job trailers on our work sites, we own those. We have Normont rents and we have our own water trucks, our own, we save about $75,000 per site by not having to go to a rental company and rent
That's
equipment.
great.
And we
No,
have trackers on them and they ship them around site to site.
yeah, that's great. And the construction company, you had mentioned that prior to the acquisition, they had mostly done Burger Kings. They could knock out a few hundred Burger Kings in a fairly short period of time. Is that construction company still doing other projects outside of your self storage business, or is it solely self storage now?
Solely our own. So
Okay,
everything we build, we own 100% of. My partners and I. We don't do any more business for anybody else.
got
It
it.
keeps our risk a little lower.
Yeah, no, I love it. I love it. I think that's it, Andrew. I don't have anything else. I mean, this is a phenomenal show. I appreciate you coming on. Just lots of great information in a very short period of time. Lots of great insights, and just wishing you all the success, my friend. I mean, you've got many decades ahead of you. Obviously, you'd already calculated out, backed into the model of I think I'll be right around 59 or 60 when I get to that 500,
I'm such a nerd.
the 500th location, and that's many years away. That's
Yeah.
many decades away, and hopefully, I hope that you get there even sooner. And again, wishing you all the best and just huge success along the way. For those that want to learn more about you, your company, and what you guys have going on, is there a place they can find you, a website?
Yeah, there's a lot of places, but easiest one's probably andrewabernathy.com. And it's got my email and cell number. And
Okay.
please reach out.
Good deal. Awesome, Andrew. I appreciate your time, my friend. You take care, okay?
Thank you so much. It was my
Oh,
honor.
alrighty, guys. That's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care.